Today, I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made 74% win rate within a short period of time. It has a low risk and high reward win ratio. And it is very easy to understand. I recently discovered the strategy as it uses just 2 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000, with a 1.5 risk-reward ratio. Please make sure to hit the like button and subscribe, as it really helps the channel. Okay guys, so for this strategy, we will be using the Ethereum United States dollar chart, and we are on the 5 minutes time frame. For traders just starting out, we are using the TradingView chart, as it is the best charting platform to analyze your trades. Now let's go into the strategy for the day. We will be using 2 indicators for this strategy, so let's go ahead and add them to our charts. For the first indicator, search for the Ichimoku Cloud. This one right here, I want you to add it to the charts, as this indicator is a package of multiple technical indicators that signals support, resistance, market trend and market momentum. It is one of the few indicators out there that attempts to convey a number of meaningful insights into one. For that reason, it could be hard to understand at first glance, but is commonly used among professional traders and market participants. With that in mind, we would be using only its cloud to determine whether the markets is trending or on range. Now for the second indicator, go ahead and search for the squeeze momentum indicator. This one right here by Lazybear. This indicator is a momentum-based indicator that tells us when the bulls are taking over the market or when the bears are gaining more grounds in the market. Now before we move on, let's quickly make some adjustments to this indicators for better understanding. Go ahead and double click on the Ichimoku Cloud. For the inputs, we won't be adjusting any of the number. Head over to the style, untick the conversion line, the baseline, the lagging span. Now change the color of this leading span A to green for clear visualization, and also change the leading span B to red, and that's all for the settings. Go ahead and click on the OK button when you are done to apply the settings on the chart. Now for the squeeze, go ahead and double click on it to bring up its settings panel. I want you to change color 1 to red and color 3 to green. Then untick the plot, and for the inputs, we won't be touching the settings. Clicking the OK button when you are done, and we are ready with our strategy settings, as the chart looks clean now and easier to understand. Now let's go over to how the strategy works. But before we do, let's quickly understand what the indicators on the chart intend to find. Now for the Ichimoku Cloud, we will be using it to determine when the market is trending. If the green is above the red span, it shows we are in a bullish trend, and if the red is above the green, it shows that we are in a bearish trend. Now the squeeze momentum will serve as our entry points in the market, as when you see a red histogram, it signifies sellers taking more grounds in the market, whereas green histogram shows that the buyers are taking over from the sellers. Now that we understand how these work, let's go over to the strategy for the day, as well as possible errors to avoid when using this strategy. Now for a buy signal to be valid, we would want to see the green moving average above the red moving average, and the background has to be colored in green as our first confirmation. For our second confirmation, we need to have price action above the Ichimoku Cloud. We would want to see a new green histogram from the squeeze momentum, but it must be below the 0 line, as we would enter our trade at the trigger candlestick. Now we see we met all our conditions here, as the green moving average is above the red moving average, and the background is colored in green. We also have price action sitting above the Ichimoku Cloud. And lastly, we got our first green histogram below the 0 line, so we would be placing our entry at the peak of this triggered candlestick. As it is our point of entry, we would set our stop loss at the recent swing low, while take profit levels are at 1.7 times the risk, and we could see the trade was a successful one. Now please note that if our take profit level has not been hit, we would exit the trade only when we see a red histogram above the 0 line. As we move forward, we could see we got another entry here, as you can see that the green moving average is still above the red moving average, and the background is colored in green. Price action is still above the cloud, as we got another green histogram below the squeeze momentum. We would be entering our trade here at the peak of this trigger candlestick, as we use the recent swing low for our stop loss, and 1.7 times the risk as our take profit level. And as we can see, the trade was a successful one too. Please note that we do not take trades when price action is inside the cloud, and also, we would not be taking any buy trade if price action is below the cloud, even though the cloud is still colored in green. Also, our point of entry starts below the squeeze momentum, with a green histogram and not above for a buy signal, so make sure you write all this down to better understand the strategy and avoid such mistakes. Now let's move on. Exactly the opposite is said for a short trade. For a sell trade to be valid, we would want to see the red moving average above the green moving average, and the background has to be colored in red as our first confirmation. For our second confirmation, we need to have price action below the Ichimoku Cloud. We would want to see a new red histogram from the squeeze momentum, but it must be above the zero line, as we would enter our trade at the triggered candlestick. Now we see we met all our conditions here, as the red moving average is above the green moving average, and the background is colored in red. We also have price action sitting below the Ichimoku Cloud, and lastly, we got our first red histogram above the zero line, so we would be placing our entry at the bottom of this triggered candlestick. As it is our point of entry, we would set our stop loss at the recent swing high, while take profit levels are at 1.7 times the risk, and we could see the trade was a successful one. Also note that if our take profit level has not been hit, we would exit the trade only when we see a green histogram below the zero line. Please also note that we do not take trades when price action is inside the cloud, and also, we would not be taking any sell trade if price action is above the cloud, even though the cloud is still colored in red. Also, our point of entry starts above the squeeze momentum, with a red histogram and not below for a sell signal, so make sure you avoid this mistakes as it could hurt your capital if you do them. Now, let's quickly go over some few examples to make you better understand the strategy. Here is a buy signal we would have avoided, so we see that the green moving average is above the red, and the background is colored in green, but we would not take this trade, because price action is inside the cloud as we do not take such type of trades. Now here is a sell position we would have taken. We see that the red moving average crossed above the green moving average, and we see the background is also colored in red, so we see that the histogram is above the zero line, as we got our first trigger candlestick here signaled by the red histogram above the zero line, so we would be placing our sell stop order at the bottom of this trigger candlestick, as our take profit levels will be 1.7 times the risk, and stop loss at recent swing high. We see how successful it was. Now let us go over and backtest the strategy 200 times with our account size of $1,000, as we would be risking 1% of our account size on each trade. Let's jump right into it. So we just finished the backtesting for this strategy, and we can see that the results are amazing. We had a win rate of 74% in 200 backtested trades, having won 149 trades and lost 51, which made us 202% return on investment. And I found those wonderful trade setups within 11 months, although commissions and spread fees would eat up some of the profit in real trading because it was not included in the backtest. So you definitely want to expect that number to be lower when trading life. The profit factor for this strategy is looking good, I guess. And we had 5 wins in a row against 4 losses in a row. So yeah, I'm definitely happy with these results. Okay traders. That's it for today. Thanks for watching, and see you in the next one.